Good morning, good afternoon, and good evening, everyone. Welcome to the Island Finance Forum and this session in particular. First of all, a big thank you to Island Innovation for organizing this conference and providing an opportunity to discuss issues of critical importance to our island communities. And a big thank you to our esteemed keynote speaker and panelists, as well as you, our audience members, for joining us here today. I'm Stacey Scott, your moderator for this panel, and I'm joining from the beautiful Cayman Islands. I'm a senior manager at KPMG working within KPMG Impact, which is the accelerator for KPMG's global ESG strategy. For those who may be unfamiliar, KPMG Impact is a platform that supports and empowers both KPMG professionals and our clients in fulfilling their purpose, achieving their ESG goals, and supporting the world's attainment of the UN SDGs. So today's discussion is one that is very relevant and close to what I do each day, and also something that I'm very passionate about personally. Today, we are pleased to be delving into an exciting discussion on environmental, social, and governance investing for sustainable development. We have a wonderful keynote speaker and a panel with a wealth of experience in investing in ESG joining us today, and we're very fortunate to have the opportunity to hear from them shortly. It seems that every day there is a new story or headline in ESG investing, and the appetite and interest is undeniable. In late January, Bloomberg Intelligence predicted that global ESG assets may swell to and even surpass 41 trillion US dollars by the end of 2022. They took this a step further to say that by the end of 2025, they expected this to grow to 50 trillion US dollars. If this is true, it would represent a third of the projected total assets under management globally in 2025. Yet, while ESG assets and ESG investing are on the rise, we are woefully behind on the UN Sustainable Development Goals. In February, coincidentally, just a week and a half after Bloomberg released their prediction, the UN Deputy Secretary General, Amina Mohammed, told the UN Economic and Social Council that we are far from where we should be on the SDGs. And the pandemic has, no surprise, pushed us even further off course. Indicators on poverty, hunger, education, and jobs are all moving in the wrong direction. While ESG investing alone can perhaps not solve all of the world's problems, there are many that believe the industry is not doing as much as it could. As island communities, the threat of failing to progress on the SDGs is felt perhaps more acutely than it is elsewhere, particularly with SDGs relating to climate action. With this challenge in mind, we will be hearing from our keynote speaker and each of our panelists before we move into the question and answer segment of today's session. It's always great to hear from you in the audience as well. So please do submit any questions that you may have using the Q&A function at the bottom of your screen. It would be lovely to know where everyone is joining from. So when you do submit a question, please also include your name, your organization, and your country or region, as well as let us know who your question is intended for. Also, if you can, please remember to submit comments or questions to all panelists and attendees in the drop-down box, as unfortunately, it automatically defaults to all panelists in Zoom. That said, without further ado, I am pleased to introduce you to our keynote speaker, Raquel Moses, who is the CEO of Caribbean Climate Smart Accelerator, to share her valuable insights on catalyzing ESG investing for meaningful change.
Thank you so much for having me today. I really appreciate the opportunity to talk about ESG investing for sustainable development. So there are 5 things that I want to cover with you today, and I think it's really important that we're talking about this topic because the issue of climate finance and how we fund the change that we want to see really makes a difference in our ability to get there. And there are lots of nuances in how we have this conversation. So I'm going to talk to you about 5 things today: the perspective that we need to have, how we embed this in the organizations that we lead or are part of, some of the barriers that we face, some great news that we're seeing, and certainly what's needed to be able to take this all the way. So when I think about the perspective, I recently read an article by the Harvard Business Review that's talking about that ESG is not performing. And it's such an interesting perspective, and I happen to disagree with Harvard Business Review. But I think the perspective that they're taking is that ESG isn't performing using traditional measurement. And ESG requires that we think about things entirely differently. So I think even in how they're talking about ESG and the performance of ESG is taking a short-term perspective. One of my favorite authors is Simon Sinek, and he has a book called The Infinite Game. And what's amazing about that book is that it talks about how we look at things based on the perspective of long term, rather than making short term decisions and looking at things on a much longer term in terms of how things actually impact us. So rather than looking at quarterly results, looking at annual results, but looking beyond the annual results of the history of companies. What will the decisions that we take now mean for the future of the organizations that we're in? And it really requires that kind of patient perspective. So when we think about what Harvard Business Review was saying, it said that ESG was not performing financially, or any better financially, I would say. And then it was also saying that it wasn't delivering the ESG results, which is another challenge. But again, I think that our ability to focus on ESG is going to evolve, and it will require that we have this new perspective and we allow it to evolve as we learn how to report on it, how to account for it, and how
Hi everyone,
measure the
apologies for the
changes that are
technical
needed.
difficulties. Stacey, I'll ask if you could proceed and then we'll see if we can come back to Raquel's intervention.
Sure, no worries at all. Apologies all. So we will be moving on then to our first panelist, who is Phoebe Dylander, who joins us from PKA, where she is the Chief Sustainability Officer, Deputy Executive Director, and Head of ESG. Phoebe, if you'd like to turn on your camera, I'll now hand it over to you to introduce yourself and tell us a bit about your work.
Okay, thank you very much, Stacey, and I hope the sound is better than from the previous speaker. As Stacey mentioned, my name is Phoebe Dylander. I'm heading the ESG department in PKA. PKA is the third largest pension fund in Denmark, with 350,000 members, primarily from the healthcare sector, and with asset under management of around 55 billion euros. In our view, there is no time to contemplate. Urgent action by both the public and the private sector are needed, and it's needed now. The private sector plays a pivotal role in ensuring a timely transition to a more sustainable and net zero community and economy, including the achievement of the SDGs. And we at PKA stand ready to engage and invest. I'm going to talk about what we've done in PKA to give you some examples. Redefining investments and integrating ESG in the long term has been a focus at PKA for more than 2 decades. And it's actually our members that are the ones to be credited for our efforts to invest responsibly. They have wanted us to do that for a number of years. We started with excluding controversial weapons back in 1998 and tobacco in 2006. And in 2011, not that many years ago, we invested directly in renewable energy in the first offshore windmill farm at the north shore of Denmark, called Anholt. This was at that time, only 11 years ago, a very progressive and risky investment, but it proved highly beneficial in terms of good return and by contributing to the green transition. The same year, we made our first social investments in a microfinance fund, and we're now invested in several microfinance funds. Since then, we have increased our ESG ambitions significantly. Today, we've been able to establish a green portfolio of 5 billion euros in green investments and social impact portfolio of 1.1 billion euro in social investments. We set targets for 2025 We expect to continue to grow these two portfolios, 7 billion in green investments in 2025 and 1.5 in social investments. So that keeps us on our toes. We are also part of a collective pledge made by the whole Danish pension fund sector, which was launched back in 2019 at the UN Climate Summit in New York. The pledge entails a commitment to invest $57 billion in green assets by 2030. That is equivalent to 12% of the Danish GDP. We always consider investments from a risk-return perspective. And because we have members that are going to be pensioners, we have to provide a good pension to them. That goes without saying. But what we have experienced is that social and green investments can go hand in hand with a good return. And that's the interesting part. Of course, we need the right policy frameworks and objectives to allow us as investors to identify the best impactful investments. But when we have the right policy frameworks and conditions in place, we hold both the capital as well as the motivation to invest in new and more climate, clean energy and sustainable projects going forward. I'm going to talk about a little bit about net zero. In 2020, 2 years ago, we published our first TCFD report to assess our portfolio's exposure to both physical and transition risks. Last year, we decided to commit to the IIGCC's Paris-aligned investment initiative, the Net Zero Asset Owner Alliance, and also a Danish-led climate reporting initiative. We have committed to become carbon neutral by 2050, and for 25, we've set a short-term target of reducing our portfolio's emission by 29%. Right now, it's only possible to measure scope 1 and 2. We have to wait for better data on scope 3. The same goes for asset classes. Right now, we look at listed equity, corporate bonds, and real estate, but we expect to integrate more asset classes on our way forward. As for our efforts, even though we're the third largest pension fund in Denmark, we are still very small compared to all of you out there. But luckily, we don't stand alone. The Glasgow Financial Alliance for Net Zero, GFAN's initiative, was launched at President Biden's climate summit in April last year. It seeks to bring together the global financial sector to promote and accelerate the decarbonization of the global economy. By bringing together the world's largest banks and investors, the initiative seeks to mobilize more parts of the world than just developed countries. GFANS has 3 work streams, and we at PKA are contributing to the work stream on mobilizing private capital to emerging market and developing economies. We will also be attending the COP in Egypt this year to showcase what we have worked on. A couple of words about active ownership. In PKA, we believe in active ownership. Engagement will not work if there's no consequence. We know that the moment we divest from a company, we are out of influence. We don't have a say anymore. We can't move the company towards the desired outcome anymore. As long as there's dialogue and progress, and the company that shows effort on a journey towards sustainability, we're willing to support them and stay in the company. I would recommend investors to take part in global active ownership initiatives, such as the Climate Action 100+, which represents 615 investors with 54 trillion euros in asset under management, and seeking to push the 160 largest global emitting companies to reduce their CO2 emissions. When the first phase ends next year, we will use the evaluation to determine whether companies have made pledges, plans, and so on to align their business model with the Paris Agreement, and those who don't will be divested. Global investor initiatives are key tools to hold companies accountable, when we lack the sufficient legal requirements. And again, if a company does not want to engage with us or continues to break our policies and guidelines, we simply have to divest. We need to show that there are consequences. Otherwise, we believe that engagement would not work. My closing remarks are the following. For asset owners to succeed in promoting a more sustainable future, we need the entire society to contribute. Everyone from asset manager, investee companies, suppliers, data suppliers, consultancy, asset managers, politicians, consumers. I would encourage investors to participate in global initiatives, bringing investors together to find pathways to accomplish the Paris Agreement, such as the GFANs, the Paris Aligned Investment Initiatives, the Net Zero Asset Owner Alliance. We simply cannot afford to wait any longer if we want the Paris Agreement and the SDGs to succeed and build a more sustainable future for the next generations. Thank you.
Thank you, Thivi. That was very interesting, and it's certainly encouraging to hear that there seems to be a shift towards recognizing that, as you said, social returns are not mutually exclusive to financial returns. I'm now pleased to introduce our second panelist, who is Barbara Ann Bernard. She is the Chief Investment Officer at Windcrest Capital and also a young global leader at the World Economic Forum. Barbara Ann, the floor is yours.
Okay, well, good morning, everyone. I far prefer interactive panels, so I would encourage you all to jump in. But just very briefly, by way of background, I am in traditional finance. I run a hedge fund, which is a global long-short fund. I also run a energy transition fund, which does public and private market investing. And I have a deep passion for carbon. So happy to talk about carbon credits. And I have this view that we can make carbon the currency that funds the energy transition and restores and preserves countries like mine. I'm in the Bahamas, our natural resources. So those are sort of my passions. I believe in ESG 2.0, which in my opinion is about authenticity and materiality. And that is the portfolio that sits at the intersection of profit and purpose. I believe that deep ESG is deep value and deeply impactful. So as our first speaker was saying, I know the audio wasn't very loud, but I could hear her. And what she was alluding to was the fact that there is a ton of money committed to ESG. By my math, the number is 100 trillion, which is a third of all the AUM in the US. So the issue is not that there's not enough ESG capital in the world, it's that it's going to all the wrong places. 70% of that money is allocated passively to things that look to me very much like the index. They've just slightly overweighted tech and slightly underweighted, heavy polluting industries. And to me, that's greenwashing. That's investing in the world as it is, not as the world we need it to be. Within my ESG strategies, we go in and we go to the carbon. And so we've backed the first carbon neutral, carbon neutral copper mine in the world, the first carbon neutral nickel mine, the first carbon neutral lithium mine, because the race of our lives is producing the commodities we need that are going to fund the energy transition, but producing the goods and services that we need in a way that's more sustainable. So I believe that when you go in and invest in the companies that are doing the hard work to decarbonize their investment process, that is deep impact, and it can be a great return as well. Larry Fink was quoted earlier this year saying the next 1,000 unicorns aren't going to be a search engine. It's going to be green hydrogen, green agriculture, green steel, and green cement. So I might just leave it there. I'm happy to talk about any of those topics, but I'm just honored and so excited that there are 72 people listening to us today. And I want to learn as much as I can from you as well. So why don't we, about opening up the floor as quickly as possible.
Perfect. Thank you, Barbara. Very insightful and certainly very interesting. I think right now we will just move directly to Ray, if that's okay, and then come back to questions at the end, if that's totally fine with you. So without further ado, I would like to open the floor up to Ray Klein, who is the head of investment banking at Republic Financial Holdings Limited. And then at the end of the session, we do have a Q&A box, so please add whatever questions you may have for Barbara Ann or Phoebe or Ray, and we will just cover those then. So,
hi, Stacey.
Is that okay? Yeah, okay, perfect. Hi, Ray, I'll hand it over to you now.
Excellent. Well, to James and to Raquel, thanks again for the invitation to be part of this forum. I think it's a fantastic opportunity. I think obviously the panel today will touch on how I suppose we as financiers could really catalyze this space. I'm bringing a real world experience working at Republic Financial Holdings. Just given the audience that we're faced with here, just a little bit about the company that I work for. We're the largest financial group in the Caribbean, measured by assets or market cap, and one of the first signatories to a couple important initiatives. Really, that was our foray into the discussion, into this whole ESG discussions. One was the Principles for Responsible Banking, which we signed in September of 2020, which ultimately put our bank on a glide path towards being a responsible institution. And what we mean by responsible is essentially not operating as solely a for-profit institution, but making sure that our institution is supporting the national development strategy of every jurisdiction in which we operate, which to date, it's about 14 of them. So what we do is we look at the national development goals in every jurisdiction. We're as far south as Guyana and Suriname, as far north as the Cayman Islands and BVI, which I'm based in the Cayman Islands, as far west as Ghana, West Africa. And we run all the way through the Eastern Caribbean, including Barbados. So we look at the national development strategy, and in the Caribbean, much of that has really been centered around how do we make our food security much more independent and less reliant, I suppose, on developed markets. How do we look at our energy independence, really just transitioning away from traditional high diesel fuel gensets to more renewable energy sources? How do we think about gender in our economies? We oftentimes are consumers of some of the social issues that happen in the United States or in Europe, but in the Caribbean, we have our own kind of distinct identity. So how do we think about the role of gender in our economies? How have we fared, based on these international metrics relative to our counterparts in some of these big markets? And then how do we think about, innovation, digitizing the way that we think about our services? How do we actually streamline that to make it better? These are all the things that essentially under this global commitment that we signed up to, we will be offering not only products, but services, but making sure that our bank is essentially relevant in this day and age. And what I mean by that is that, traditional banking is all about just, savings and checkings, right? But I think in this day and age, our shareholders, our stakeholders are expecting more from us. I suppose as the keepers of the purse, they expect us to be a little bit more proactive in societies to make sure that we're leveling out the playing field. And that also, Barbara touched on some of it, that we're investing, and not only investing from a equity perspective, but also from lending. We view that as an investment itself in the industries that are fit for purpose for the future. So renewable energy, clean energy, all of those industries we want to support. So, I hope to bring some of that to bear on the conversations today. In addition to the United Nations Principles for Responsible Banking, we were one of the founding signatories to the Net Zero Banking Alliance, us alongside I think it was around 34 other international banks, some much larger than us. So the likes of Citi and Bank of America. But we were happy to be the only representative from the Caribbean being part of that. So we are on a glide path again to make our bank net zero by 2050. And then in addition to that, we were the keynote sponsors for the first ESG summit in the region last year, done virtually. Hopefully this year we'll do it in a physical format, but really to start to have that conversation with some of our stakeholders, whether it be clients, whether it be shareholders, whether it be some of the regulators, around how we can essentially embed ESG as a strategy into our business to make sure that some of those metrics that Barbara touched on are, they're not only financially being achieved, but also I think, some of the other non-financial metrics as well, that we're achieving them as well. So I'm equally as excited to have, I think, your questions and have a discussion with you guys. So I'll hand it back to Stacey so that we could really start that.
Thanks, Ray. It's great to hear about the work that's happening so close to home. And as we mentioned earlier, our island communities, and especially here in the Caribbean, I'm also in the Cayman Islands, so I can relate to you quite well. We are really at the front line on climate change and other critical matters like that. So it's encouraging to know that we have a presence and we've signed up to some of these commitments that other larger banks have also signed up to. I believe we have Raquel's video available now. So we will try that again. Hopefully there aren't any technical difficulties this time. And then immediately as that ends, we will move to our Q&A segment.
Thank you so much for having me today. I really appreciate the opportunity to talk about ESG investing for sustainable development. So there are 5 things that I want to cover with you today, and I think it's really important that we're talking about this topic because the issue of climate finance and how we fund the change that we want to see really makes a difference in our ability to get there. And there are lots of nuances in how we have this conversation. So I'm going to talk to you about 5 things today: the perspective that we need to have, how we embed this in the organizations that we lead or are part of, some of the barriers that we face, some great news that we're seeing, and certainly what's needed to be able to take this all the way. So when I think about the perspective, I recently read an article by the Harvard Business Review that's talking about that ESG is not performing. And it's such an interesting perspective, and I happen to disagree with Harvard Business Review. But I think the perspective that they're taking is that ESG isn't performing using traditional measurement. And ESG requires that we think about things entirely differently. So I think even in how they're talking about ESG and the performance of ESG is taking a short-term perspective. One of my favorite authors is Simon Sinek, and he has a book called The Infinite Game. And what's amazing about that book is that it talks about how we look at things based on the perspective of long term, rather than making short-term decisions and looking at things on a much longer term in terms of how things actually impact us. So rather than looking at quarterly results, looking at annual results, but looking beyond the annual results of the history of companies. What will the decisions that we take now mean for the future of the organizations that we're in? And it really requires that kind of patient perspective. So when we think about what Harvard Business Review was saying, it said that ESG was not performing financially, or any better financially, I would say. And then it was also saying that it wasn't delivering the ESG results, which is another challenge. But again, I think that our ability to focus on ESG is going to evolve, and it will require that we have this new perspective and we allow it to evolve as we learn how to report on it, how to account for it, and how to measure the changes that are meaningful. So in terms of how we embed ESG, and it's really important because when we think about embedding ESG, what we all seem to agree on is that focusing on environmental, social, and governance, in addition to financial results, makes for a better investment because you're looking at the investment holistically. You're looking at it from a 360-degree perspective. So how do we embed this ESG perspective into organizations? I think the first thing is that we need to talk about it. We certainly need to talk about it, socialize it, and embed it culturally in the organizations that we're a part of. It shouldn't be something that we fall back on if the financial results aren't performing. It can't be that. It needs to be a part of the fabric of how we operate, that we understand that in order to sustain organizations and to sustain the planet for the long term, we need to be able to look at the long-term impact and the impact in different ways and different perspectives on the organizations that we're in. The next thing that we need to do is we need to follow the data. I think, there has been so much said about the data around climate action and what that means and how we trust that data to tell us what we need to do. We need to report on ESG and look at the data that we collect so that we're able to report on it and to lead organizations that have the ability to tweak their performance over time based on data that's available and how that will impact the decisions that we make. And then finally, we need to mean it. So if by chance there is a sacrifice that needs to be made for financial returns against some ESG criteria, for example, we need to be honest with ourselves. Now, it's not always that one side is going to win over the other, but we always need to take a big picture perspective, and it can't be that financial results will always win over ESG. As an example, we need to understand that this is like the goose that laid the golden egg. It is part and parcel. If we're not focused on ESG, the financial results will be temporary. So it is about that infinite game perspective. So the good news that we're seeing, and what I'm really excited about, and certainly what we're seeing through our project portfolio, is that we're seeing some unlikely players coming to the table. We're seeing a lot of the public sector partnering with the private sector for execution. We're seeing an explosion of climate smart agriculture projects and a lot of interest in how we develop food security and how we pursue agriculture in a very, very different way. We're seeing a plethora of climate smart agriculture, of clean energy investment. That's where the big money seems to be, and certainly where there is a huge amount of interest. But conversely, we're also seeing a lot of money available for projects that are properly prepared. We're seeing a lot of blue carbon and philanthropists coming together to demystify blue carbon investment and how together they can de-risk projects or create economies of scale in order to deliver good clean energy, good blue carbon projects across the region. We're also seeing a lot of new types of financial instruments, some that we are really excited about, like the valuation of ecosystem services and looking at how that has real value in the work that we deliver. So what are some of the barriers that we face? I think the biggest barrier that we face is I mentioned project preparation. One of the big barriers that we face is that projects are not necessarily properly prepared. And that is because there's a lot of foundational work that needs to take place in support of our ESG ambitions. And in order to do that, what we have to do is we need a lot more philanthropy. So when we talk about the fact that we need investment for this transition that we need to have, we need to move beyond the sort of initial conversation of climate finance needs a lot more money. Climate finance does need a lot more money, but more than more money, it's what kind of money do we need in climate finance? And the truth is, right now what we're seeing is 20% philanthropy, 80% other kinds of investment vehicles like loans or equity or venture. What we need is far more philanthropy. And philanthropy is challenging and philanthropy is hard, but philanthropy can help to unlock so much more investment potential if we are willing to allow philanthropy to help us to get over some of the initial hurdles that we're seeing, especially especially in the Caribbean region. So what's needed is a different way of talking about it. It's a different way of addressing it, removing some of the imaginary barriers that we seem to place on ourselves. Where we see problems, we need to see opportunities in ESG investing, and it needs determination. And I think if I change only one perspective for you today, it is that we need to stop vilifying each other or pointing out who's not doing what or where. For example, unlikely actors are participating in ESG. We are all working towards very, very similar goals, despite the differences that we face. And that's the good news. The good news is that we have the same objectives in mind in general, certainly not in a detailed way, but it's very, very difficult to find people who will say, oh, well, the environment doesn't matter, or social doesn't matter, or, that isn't the conversation that we're having as much anymore. And so we need to realize history will reward the bold. We have to stop waiting on someone else to act and understand that this requires that we all act strategically and decisively towards the objectives that we have. And in order to do that, we all need to focus on our areas and what we have the ability to deliver. So thank you once again for allowing me to spend a little time with you today. And I really commend Island Innovation for this work that they're doing to bring these very, very important topics to the forefront, to have this conversation and ultimately change the things that we're doing for the better. Thank you so much. Bye.
Thank you, Raquel. Certainly an interesting keynote speech and a challenge to all of us. Barbara Ann, I'm conscious that you didn't have as much time to speak at the beginning. So I'd like to open the floor up to you in case you'd like to comment on any of the things that Raquel mentioned, or perhaps add any additional thoughts. If not, we will turn it over to audience questions. Oh, no, Barbara Ann, I think you're just in mute. Perfect. Thank you.
Great. I mean, I love when there are sort of differences of opinion. I agree with a lot of what she said. I'm less into philanthropy and more into sustainability, which means ecosystems that are self-funding and perpetual, if you will. One of my passions right now is helping countries issue carbon credits, and I'm actually building a carbon credit exchange. Because I believe when carbon is digitized and it can settle globally 24/7, it becomes the currency that funds the energy transition. I also believe that in island nations like ours, we are reliant upon depleting sources of polluting energy, and that we have the potential to become green superpowers if we can monetize our natural resources and use those proceeds to fund our energy transitions. In the Bahamas, we burn bunker fuel and it's over 30 cents a kilowatt hour. We could be running on solar for 7 or 8 cents a kilowatt hour. So reducing the cost of electricity by 75% is the single greatest thing we can do to increase the standard of living for people in the Caribbean. And this is where I'm putting a lot of my time and energy. So I would say to anyone on this call who thinks they have a project that carbon credits can be issued for, either public or private, I'd love to learn about it and help you. We have a stake in a firm that issues carbon credits. And the other thing is for these corporations that are buyers, it's a lot more authentic for a cruise ship to be buying credits generated in our waters in our country than from wind farms in Kansas, which is exactly what Royal Caribbean did to offset 10% of their carbon footprint. So I think there's both demand and supply for authentic offsets, and that it behooves us to use them in a way that can really be transformative, and that collectively we can do this. Going to market one little project at a time is never going to work. For there to be a market, you need an exchange, it needs depth, and that needs liquidity, that needs volume, and that needs collaboration. So I'll leave that there.
Perfect. Thank you so much, Barbara Ann. I'm just building off of what you've said now and a question that's come in throughout the course of our discussion. What else, and this is a question that anyone is free to answer, what else do you think governments should be doing to incentivize ESG investing, whether or not that's from a private or commercial perspective, whether that may manifest in green bonds or green loans or sustainability linked loans, or otherwise encourage pension funds or private citizens to invest in green or ESG assets?
I'd be happy to start off with that question and answering it. So from our point of view, of course, I mean, a stable political environment and rules and regulations in place, I mean, that's just a must. But if we build on top of that, then one of the things that we have had very good experience with in the past are private-public partnerships. So team up with the state, maybe taking some of the risk in going into a new market out of our investments, making it a viable business case for us. It might be blended finance, it might be first loss, and so on. So working with the DFIs is something that we had very good experience in. And more of that in our view. And if I could just 2 words on the keynote speaker, which she had very good, some very good key messages, and I agree with data being key and having to report on ESG. There's a lot of legislation right now in the European Union in that regard, a taxonomy regulation, a disclosure regulation, and so on. But in terms of more philanthropy, I must say we can't go into that field at all, and I don't think any pension funds can. So what we need is good business cases, basically. And a minimum ticket size, and the government, the state, taking some of the risk out of new investments. That would be of great benefit for us.
Thank you, Thivi. Ray, Barbara Ann, would you like to address that as well, or shall we move on to the next question?
Well, I mean, I generally avoid any questions that asks bankers to, give governments advice. I mean, the only thing I could say is, from our perspective, governments can be enablers. So wherever there may be roadblocks in terms of things like approvals, making sure that they streamline that, because ultimately, one of the things that money is impatient, right? So if it takes 2 or 3 years for you to get a project approved in any one of these island states, it's going to find a way or find a home that is much more responsive to its needs. So I think, my only comment, and I think that's one of the main purposes of governments when it comes to things like investments, would be stripping out red tapes to make sure that the private sector can essentially move through the process in a truly private sector way, which is, we can go through a life cycle, or at least, kind of push things out of our pipeline within a fiscal year, and not have it be really tied to, multiple years, because, you have to hire some consultant to come in and analyze something. So I think that's probably one of the best ways that governments could get involved without really being, I suppose, funders in a way.
Perfect. Thanks, Ray. Barbara Ann, we have quite a lot of interest about carbon credits now, so I will turn over to you to answer a few of the questions that we've had come through here. So one of our audience members asks, what is the status of carbon credit, opportunities in the Caribbean? And does it require more policy or legislation to enable this? So overall, I suppose the Caribbean, or even more generally SIDS, where do you see the current status now, and governments even perhaps moving in the next few years?
So I think it's a big opportunity, and I think legislation is a good first step. The Bahamas just came out with some legislation last week. What I would advise any countries it's something that needs to be looked at holistically. So the first step is mapping the opportunity for the entire country, and then finding who are the best people to partner with in terms of generating credits on the various opportunities. You can have credits based on the carbon sequestration of your mangroves and seagrass, but you can also get credits on waste energy, from solar power, from solarizing airports, et cetera. So there's a ton of opportunity. And when you have high quality credits, there's a ton of demand for them. So it's just going about it in a thoughtful way. And then, being very clear about what are you going to do with the proceeds? When you issue an REDD plus credit, which is what the nature-based credits are, most of the proceeds have to go towards further conservation, which is something that's misunderstood too. So I think there's an opportunity for Caribbean nations to be some of the first countries in the world to have green wealth funds. And that's where the proceeds of, REDD plus credits would go. But there's also the potential for our countries to start sovereign wealth funds, which is very interesting. And so, to me, this is about energy independence as much as it's about restoring and preserving our beautiful habitats.
Perfect. Thank you. I couldn't agree with you more there. We have a question that's been upvoted by a few other members of the audience, so I will go to that one next. And again, this is open to whoever would like to answer it. This person says, as a layperson in this area, who are the desired ESG investors? And then secondly, an earlier comment was that we need to remain, or enterprises need to remain investable. So what exactly does that mean? What makes an enterprise investable or of interest other than, of course, financial returns? So the first question, who are desired ESG investors? And then what makes an enterprise investable beyond financial returns?
I'm happy to take the second one. I don't know if any of my fellow colleagues could take the first one, but I don't know if you want to do it in reverse order, but maybe, maybe since I'm speaking, we can do that. From our perspective, when we think about the value add of being an ESG enterprise, away from the I suppose the financial metrics, it's very difficult to delink them, because essentially we think that by being a responsible organization, it helps you in a lot of ways to actually improve your financial results. And I'll give you a classic example. One of the exercises that we had to do as part of some of these commitments that we're doing is really look at how we capture data. We're a bank. We have access to a lot of people's information. What we do with that traditionally has been just reporting to our regulators, right? And reporting in a format that they've asked for. So we really haven't used that data in a way that could actually make us much better risk managers. And I think what ESG is really asking us, at least what our view is, what it's asking us to do is to really look at society as a whole. When we capture some of these data, see in ways how we can really push some of our clients to be much more, I suppose, responsible when it comes to consumption, which typically has really fall outside of the remit of banks. If you're paying your loan, we really don't care about how you treat the environment. And I think in a new lens, now what we're saying is that is all tied together. You're potentially going to get some kind of concession as a result of really having good metrics on the environmental side. How your gender mixes, the composition of your workforce. If you're, all male dominated company, it's likely, most of the data tells us that you're probably going to be a horribly run organization, over time, over a period of time. You have to bring diversity in. And that goes, that goes along with race, religion, many different facets, is what we think about diversity. So I think we're starting to now have those conversations with our clients where that are becoming a lot more granular than where traditionally bankers would essentially just kind of limit their scope of works to really how you're servicing our loan, how, essentially how your accounts are doing, whether or not you have any financing needs, to things now that we want a holistic picture of your organization, how you're thinking about, particular new emerging threats that are coming into your space. And we're really using data in a lot more responsible way, in the sense that we know what the industry benchmarks are, so that when we go into those conversations, we can now really try to nudge our clients towards maybe some industry leading standards in the way that they run their businesses.
I'm happy to chime in there. I mean, a good ESG investor backs good management teams. I think ESG is active, it's not passive. And often companies get criticized for CapEx expenditure, but if you understand that 20% of the world's markets now have a price on carbon, using your CapEx to get ahead of the carbon curve is a perpetual savings, because you're never going to have to buy carbon offsets. And so where I get frustrated is companies don't get credit for decarbonizing because it's taking a longer term view than what's going to happen this quarter. So for example, if I just give you an example of Canada Nickel or Foran, which are both carbon neutral copper and nickel mines in Canada, where there is a carbon tax today, those companies will never pay a dime of carbon tax or never buy a carbon credit because they have engineered just a better business model. And what they've done is they've used hydro as their source of electricity. And when they mine, they're going to use driverless EV trucks. So there is no human in the mine, which means you don't need to aerate it. And that's the most expensive part of mining. So their margins are higher, their operating leverage is higher. They are avoiding paying the carbon tax, and it's a better business model. So the investor that understands you're spending today to have a perpetual edge on your competitors is the type of ESG investor that I want. It's not the investor that just says, oh, great, I'm going to buy the naturally low carbon emitters. Let's buy Google and Amazon and think we're saving the world. And I'd argue that not only is it a better return by investing in those companies that are truly innovating, but you're also, quite frankly, changing the world with your capital, which is what most people think they're doing with their impact investment. So I would just encourage people to double click on what is the impact of that dollar, and don't waste an ESG dollar. Put it to work in a material and authentic way, and you'll probably end up with a better return too.
Thanks, Barbara.
With both Ray and Barbara Ann, I mean, we want to make the most out of our investments and avoiding, for instance, stranded assets. I mean, firms, companies that you find today are great investments, but tomorrow will not be there. I mean, that's also part of what we're looking into. One of the things that we've taken into account more thoroughly the last couple of years is biodiversity. We're a huge developer of buildings and properties in Denmark and abroad, and how to integrate biodiversity and also climate adaptation. I mean, being resilient to weather change and so on. That's also, I mean, it's something we do because we believe in it, but it's also a good business case. Again, avoiding stranded assets. I think that's also important to know for institutional investors.
Great, thank you, Phoebe. And I suppose just building on that, Phoebe, you spoke earlier about the assets that PKA is starting to look at. I believe you mentioned listed equities, corporate bonds, real estate. And this is a question not just to Phoebe, but Barbara Ann and Ray. Please feel free to chime in as well. Is there one particular asset class that you see sort of leading the charge, that there's the most impactful or measurable change or impact in ESG, either today or perhaps in the next 5 years?
I think in general there's a lot happening. I was talking on that when I mentioned the TCFD reporting and our data and that we don't have data on all our investments and all asset classes. I think private equity is maybe some of the easiest to start with, and then buildings, properties, because we have a lot. So that's where we started. We're building on infrastructure this year, and then it will, put more asset classes as we go along.
From the Caribbean perspective, obviously we are real estate remains, I think, one of the areas that has a big footprint. So we think primarily because a lot of our jurisdictions are tourism based, we could start with that as a really as an asset class. I think much of our portfolios really are overweight real estate. We have power generation as really a sector. I'm not sure if it's a particular asset class, but really as a sector that we're looking at in the Caribbean to really shift again more along the environmental lines, away from maybe some of the harmful or maybe the high carbon contributor effects in terms of our portfolio. And then I think lastly, so we look at personal loans and really how we adjudicate some of those loans, because that kind of has a gender tilt to it. So we want to make sure that we're providing loans equally in the societies in which we operate. And what I mean by that is, essentially, I think what we've discovered during COVID is there are a lot of micro businesses that are popping up. And in the traditional sense, most banks, because of our regulators, it's not, I don't think personally bankers think this way, but because there's certain capital charges that come with every liability or every asset, meaning every loan that we essentially we lend out, we have to look at innovative ways to make sure that we're fueling that micro segment as well. And it just can't be a traditional asset-based lending where somebody has to own a house or has to have some kind of tangible collateral. We have to find ways to get around that. And traditionally, what we've found is that in some of those segments, without even really looking at it, it just lends itself to essentially a disproportion between gender and some of the other segments as well. So I suppose what we're trying to do there is really look at our personal lending segment to make sure that we're not penalizing any particular gender-based part of our societies based on some kind of old, outdated model towards lending. We have to really embrace what a lot of businesses are typically doing now, which is really technology. So they're not going to have your traditional brick and mortar store to really secure any lending. They're going to have technology. They're going to have things that are much more intangible. So how do we actually support that? And how do we make sure that we're being very strategic in not penalizing any particular segment? So I think that's a perspective from, I suppose, a regional lending institutional.
So I see opportunity within all of the asset classes. Within equities, I think there is a lack of high caliber, authentic ESG strategies out there. So I think, for people who have an authentic ESG equity fund, if they market it well, they should do, I hope, very, very well, because I just think, that's why all the money is going towards these passive greenwashing strategies. There's just not enough supply. And then within debt, I think green bonds are quite interesting. And when you look at companies like Toyota and being innovative, right, it's green bonds is a lower cost of financing. Well, they issued a green bond and they're passing those savings off to the customers who now have a lower cost of borrow to buy cars. So financing, helping to finance the transition to EV vehicles, I think is a wonderful use of a green bond. And then, of course, my favorite asset class, and I call it an asset class, is carbon credits. And I think carbon credits are where crypto was 5 years ago. And that when we take the greenwashing out and the double counting out, and both of that can be done with AI and blockchain, you start getting a currency that people trust, and then we can apply the principles of corporate finance to that asset class. So I'm very excited about the ESG opportunity within all asset classes.
Perfect. Thank you all. It seems we are just about on time. So thank you, Phoebe. Thank you, Barbara Ann. Thank you, Ray. And thank you to Raquel too, who joined us remotely. Some really innovative ideas. And it sounds like the future is quite bright for our island communities in ESG investing and their impact on the SDGs. So with that, we will wrap up our session. Thank you as well to the audience for your questions. Apologies that we could not get to all of them. Unfortunately, we were just too short on time and there were too many questions. But I see quite a few of you have left your contact details. So perhaps, who knows, one of our panelists will be in contact with you afterwards. But thank you again. Have a great day or a great evening, depending on where you are, and take care. Thank you.
Thank you. Bye-bye.